Guys, welcome back. Another episode of Chart Talk. As always, let's jump right in. We're going to focus on the major indexes first. So again, the Qs, S&P, both pretty much trading basically in lockstep. Again, we had this kind of mini V bottom off the lows. Again, a few weeks ago, much different expectation of where the market was at. This was, going into Thanksgiving. Market was coming into support, multiple attempts, big bearish engulfing day. And it seemed like we were going to, break this support area and potentially test a 200-day for the first time in many, many months. But the opposite, of course, happened. We got this sharp V bottom off the lows. And now we're back in this broader range, which we've been talking about for the past couple of weeks, where, we have this 650 at support. We have this 690 as resistance. And we're just trading range bound. We're trading horizontally, back and forth between, this area of resistance and then this area of support. So again, down here, the toughest time to buy, and conversely, the best reward you get from those buys. And then when we're back up at resistance, this is the hardest time to buy because your risk reward is much lower buying up here than it was down here. So, expect to see a retest or a push through this 685 area in the S&P this week. We've had this tight little flag, kind of forming here, which is all normal price action. Expect a little push higher through this retest, but these retest areas are often met with resistance. We can look at, the healthcare sector for an example of that, where if we zoom out, just like a weekly, we can see here that healthcare had ran its all-time highs. This is back last summer. It gets back up there, and this is where we were talking about this in the newsletter this weekend. When it breaks through that first time, it seems like this time is different. It's going to push higher, and this is kind of where the market is setting up now to push through that retest. But the reason why we look to sell these retests is that oftentimes sellers start to come in. If you think of anyone who was buying healthcare a year ago and sat through this pain and now get out break even or for a small gain, that's typically what they're going to do. So we saw that fall through the last 2 weeks with the healthcare sector. They retested the prior all-time highs. They pushed through it, but then have since faded back into the range. And again, it's normal price action, which is all the time. We've seen this develop further in the consumer discretionaries where, kind of same thing here. We have consumer discretionaries put in an all-time high, break down, they retest that high right here. Again, they kind of push through just enough and they pull back into the range and they start to flag out. So we should expect to see this flag start to form, in the healthcare sector. But for now, it's still too soon to really see where that pivot low is going to be. And that's where if we're, backing up even further, talking about the index, it still needs to retest this area, still needs to push through a little bit. And then that's when everything seems great again, but then you get that little broad weakness to pull back into the range. So broadly expect a range bound market to continue for the time being. And again, those key outs for right now, very short-term pivot low, the 675 area, but the key area is this 650. Anything above 650, market's fine. We break below that, different story. Again, it's been nice to see the dollar pulling in a bit. Again, we want to see a weak dollar to help push the market higher. We've seen very key resistance at this like 100 level in the dollar. Has not been able to break above it. And this last week or two, we've seen the dollar pull in, and we've also conversely seen the market rally back. So we want to see the dollar continue to pull back into this range, and we should expect to see the market continue to push towards highs. If this dollar starts to break out, that's when you can expect some weakness from the indexes. So sector-wise, again, a lot of the similar kind of V-bottom action, semis super strong, retesting those highs. Biotechs trying to get back to their all-time highs. Again, they're trying to follow what healthcare was doing. So if we're switch this out to a weekly, We can see going back, like 5 years, biotechs have not put in a new all-time high. And now they're getting very close to doing that. And just like healthcare, we should expect that push through, that, euphoric move of where it's going to continue higher, but then, profit take comes into place and it pulls back into the range. So very strong sector with semis, very strong biotech, kind of on that last leg, the final push higher. And we see the same thing even here with telecom. So let me switch over to a daily, and we're seeing the same theme here when we come to these retest areas. All-time highs over here, flags out, pushes through. You get one good day where it pushes through, and now selling starts to come in because everyone that's been in buying this time now is looking to take some profit. So we see this all the time. You just have to recognize the retest and take advantage, take profits when you can. So sector wise, definitely want to keep an eye on the consumer discretionaries. Again, still flagging out the key confirmation of this breakout is going to be through 400. So until that happens, you don't need to worry about it, but just focus on the break of this all-time high. Has multiple attempts, looks, very good. Even the small caps, again, I'm going to switch over to a weekly. Small caps have been basically in this massive range, massive flag going back a couple of years now, and they're finally starting to get above these all-time highs. And now we have that secondary set up through the new all-time highs. So, small caps have definitely lagged what the market has done. Small caps have been in a massive range for 5 years now. Well, and you had the S&P breaking out to all-time highs for the similar amount of time. So definitely keep it on the small caps through this all-time high break. Again, some weak sectors, some sectors to avoid. Materials continue to be very weak. I'm going to delete some of these messages. But again, we had these arrows drawn out a few weeks ago of saying, we saw this little downtrend break, but as it shifts into this new base, these orange lines, it needs to come in and kind of back test this prior breakdown stage. So I had these arrows drawn from a few weeks ago, and we can see almost to the penny, we expected some sideways action, and then we expected them to pull back in and try to test this area. So, it's getting pretty close to that, and then you see it back into this area, and then sort of turn back up, and eventually get that break down the road through this area, pushing it to all-time highs. But for now, materials, definitely avoid. Consumer staples, 200-day continue to act as resistance as we continue to see these lower highs. Avoid the staples. And somewhat of a good sign has been this break of the breakout channel in utilities, because we want to see a weak utility sector, meaning that smart money is leaving utilities and moving to the more momentum, happy spaces. So good to see. We want to see utilities getting sold off. So again, some current swings, again, still in this Tesla. We're expecting that retest coming into this week. A little bit of profit taking came in today. Again, if you think of where we were at in Tesla 2 weeks ago versus today, if you're a short-term trader, definitely can make sense why you want to take some profits after this, 60-point run up in 2 weeks when it looked like the trade was going to fail, just 2 weeks ago. So for now, in this massive range, again, we keep talking about range about market. We want to wait for that break at 470. And as long as 380 continues to hold up, just let it continue to set up. So the big focus this past week has been NVDA. So I've been, talking about this pretty actively in, in the group. And, we've seen semis wake back up. We've seen that sharp kind of V bottom off of lows. You can almost, I'll delete these lines for a second. You can almost see like the left side of the, the V here for NVIDIA. NVIDIA is just kind of lagged in this semi snapback, but chart wise, we can just see this 186 area, 184, 185, 186, like this area has been resistance since August. Very clear resistance level. Couldn't get above it. Breaks out, gets that final push. And now that it sinks back in here, it starts to set back up. This is oftentimes when traders forget about the name because it's been pulling back in. And these are often times where we can find very tight risk setups in the name. So last week I was getting in. I saw it pull in versus this, runs up to 185, pulls in at 179. And over the next couple of days, it could not get back below that 179. And then the next day couldn't get below 180, then 181. And then today, low day was 182. So, we were seeing, and I don't really like to show a 15-minute chart too often, but look at it for a moment or two. And, this was the range this name was trading in. So, NVIDIA tries to break 184, pulls back in, 179 access support. Then next day, again, tries to go for 184 again, but now it can't break below 180. The buyers have now stepped up. Another day tries to break 184, it can't. Seller's still there, but the buyers continue to step up. So they continue to step up $1, every day or so. And then what we saw today, we saw that push through 184. We saw it pull back in, and then finally had the real break through it, through 188. And again, we're seeing, the buyers continue to step up. Now, again, after hours, we had some news with NVIDIA. It's gapping up to about 190. And again, for us, that's great because we're buying it for 183, buying 184. Some people are buying 185 today. And it's already gapping up in our favor, already up another 3% after hours. So for now, we got a very good position. We got some good news pushing the stock even higher. And now it's just trying to be patient for that move back to highs. That's this short-term trade is, can this thing get back to this 210 area? So we just want to be patient with this name. Again, for myself, my big focus is always getting the risk as close to break even as possible. So given this gap up tomorrow, if this thing holds this gap up or pushes higher, I'll raise that stop from, which was currently 180, to the low of day, 182. So I'm risking at this point, if we get the gap tomorrow, 50 cents in this swing for a potential trade that could, we'll see where it goes. But the big emphasis is just finding these tight consolidations, trying to minimize risk as much as possible, focusing on the strongest names. And then sometimes you get this positive news after hours and you get rewarded for it. So we'll see if we can stick with this winner, if it's just starting to wake up. Another name keeping a very close eye on is this Gilead. Switch to a weekly for a moment. And if we zoom out a bit, we can see Gilead has taken out its all-time high. So again, I know this might not be the easiest thing to see if you're watching this, but going back to 2015, nearly 10 years, Gilead has not been able to break out to a new all-time high. 10 years, it pulled in, chopped around, massive base. Talking about those base breaks in, BABA this year, multi-year base breaking out, and now it's finally starting to break to new all-time highs. Now it's back inside of the prior all-time highs. That's fine. We just want to focus on the name when it's ready to get back above the new all-time high area. So for now, we can see this 200-day has almost perfectly acted as support in this breakout stage. Gilead has barely ever touched it. If it does, it's for a day and it snaps right back. So we know the 200-day support. We know 129 is the new all-time high. We know this is the overall trend. So either you can be looking to buy this thing as it pulls into support, or if you're not as patient, you just wait for that all-time high break down the road. So definitely keeping, a very close eye on this Gilead, knowing that It's a decade plus long setup. Doesn't mean to have to go tomorrow, but you don't want to miss it through that 129. So we'll go over a couple big picture alerts. Going back to the beginning of the month, we had this sell stop alert in Regeneron, and we had an alert previous in it to buy through this 660. So we had an alert to buy through this breakout of this little flag here. Move this so you can visually see it. So we can see name couldn't really get above 665. Alert triggers. One of our buddies, Joe, gets in it, and Regeneron runs 100 plus points in a very easy fashion. And after we saw these two inside days, it was time to have that alert to take profit. So you can even see on the chart here, 773 was where the alert was at. This is 773 right here. Joe gets out as soon as it starts to break. He makes over 100 points in the trade, and it's already given back nearly 100 points. So this is why you want to have these trailing stops, and knowing when to get out is just as important as knowing when to get in. So he knew when to get in, he knew when to get out, and then he doesn't have to sit through any of this pain where this name ultimately will most likely come back to the entry anyways, and maybe there's a secondary trade. But for now, it's an avoid. Next up was this Triple M. Again, we tried this name last week. Again, we can see, this is the high, this is the retest, starts to flag out very tight here, all the things we want to see. And then we bought through the break, and we just didn't get that follow through the next day. We had inside day and down. We took the loss, 1% loss, not a big deal. I know some members got out a little bit lower, like a 2% loss. Again, not the end of the world. And since then, we've had 3 days down. And again, 3M still looks great. I know I wouldn't be buying it tomorrow, but still a broad flag. We were just a little early. Took a 1% loss, not a big deal. And we'll circle back to it, when it gets back up to those highs, whenever that time comes. Next up, we had this ALK alert through 42.50. See where that's at today. It's been cooking. So again, we saw this ALK. Again, nice little sport buyback. You can see, we were talking about this a few weeks ago. This key area was support. So it's then back up. And now it's had a nice 10% plus move. And now that 200 days on active resistance. So another good alert from that ALK. CRSP, another one. CRSP was this alert through 54. It's back on December 3rd. And you can see this is the day where this name triggered again. Very similar themes, all these names. The CRSP had pulled into support. Again, this is pretty much the support area. We're not trying to perfectly buy support. We want to buy the break of resistance, which for this name, pretty much was the 200 day. So we had that entry through 54. 200 days now acting as support, even better. And now we have a nice little, potential flag that's going to form. And you have that next break through 60 in time. So still looks very good. Let's see, we got Frog. Broke out through the 63. So doing fine, pushing through this little retest area. For now, you kind of keep that break even stop. XYZ hasn't really broken out yet, but just keeping a close eye. Again, similar theme here. We can see the support area. We can see it break here, snap right back, still acting as support. Maybe it's still a little too early. Maybe it still needs to break this and shake this area one more time. But when it's ready to break back up through this 61, it's $1 risk of a trade here in a name that's, basing out near support. So still keeping on that one. Again, we had this alert in NVDA, talking about earlier, pushing to that 185 area. And, now it's $5 higher. So NVIDIA alert's working well. eBay, had this alert in eBay, similar to that XYZ. Nice little sport buyback setting up in it. And you can see, NVIDIA, eBay gaps down on earnings, starts to base out, 200 days acting as support. So 80 is support, 84 has been resistance. Just like the XYZ example, we're not trying to buy support. We're not trying to buy the low. We want to buy the break through resistance. So the name started to go today. You'd probably have a stop versus 80 still not in it because I'm personally just fully in that NVIDIA, but still looks very good. Just getting started on that one. Again, some more alerts, just reminding people of the NVIDIA breakout. And then we have this CHCO talking about, semi names, small cap names being quite strong lately. This CHCO is small cap name. Touched the trigger today, but not ready just yet. Again, very clear level of resistance. You can see this name has woken up quite a few times through this level. It's been acting as resistance for the past couple months. We're seeing buyers stepping up. Support was 115. Now it's 120. Now it's like 121. Again, 200-day catching up, calling up under the resistance level. All these key themes we want to see in the names that we're, trying to buy. So in the newsletter this weekend, I spent a little bit of time talking about kind of good and bad trades. So I'm going to go over a few of my own bad trades. We talked about it, this 3M. Again, this trade failed. I lost 1%. We bought the breakout, came right back, took the loss. Again, I have to really zoom in here to show, the exit, which was below this low of day. And again, if we're expecting a breakout and it's coming back below the prior low day, it's telling us the name isn't breaking out. No reason to stick with the name or fight with it. Just take the L and move on. So this was a failed trade, lost 1%, no big deal. Next up was this Apple. Again, we talked last week about the comparison of Apple currently versus what Google has done the past few months. And we took this breakout, but again, it just wasn't ready. Went a couple bucks in our favor. We bought 280, pushed nearly to 290, and just started to come back in. We didn't have the best price in the world. So once started taking that low a day, we took the little lunch money gain. We made $4 or $5 a share. Now this, if we stuck with it, it would have been a break-even trade or a losing trade. So we made some money, but I'll still call this like a failed trade. And for now, let it pull back in. I'm not going to buy tomorrow through 280, but if this pulls in, I don't really want to see it pull back to this area, but pulls into 270, 275, and then trades a little sideways and gets back up to here in a couple of weeks, would easily take that trade without a second thought. So Triple M lost 1%. Apple, we made 2 or 3%, no big deal. This MEDP, we had a nice alert in it a few months ago through this break through 440, and we pretty much saw the same kind of pattern forming again, the gap on earnings. And we took the trade and we took some profits into, we done with a retest. So MEDP retested highs. We took some profits into that, came right back down. We got stopped out for a marginal gain on the remainder of the position. So made a little bit of money, nothing to lose sleep over, but then the name got destroyed after we got out. So Triple M, 1% loss, Apple 2-3% gain. This MEDP was like a 1 or 2% gain, nothing crazy. Could have been much worse. And this CICI. Now I'm counting these all as just kind of like failed trades. But you can see that even with these trades failing, these aren't disastrous losses. They're just like, who cares type of losses. CICI, another small cap name. We've been focusing on these small cap names given what IWM has been doing. And this CICI was a blue sky breakout, all-time high breakout through 600. Went about 20 points in our favor and came right back. No reason to stick with it. Take the break-even trade and move on. And it's still flagging out. Definitely can still try it again through that 600, but the name was super thin. Had like $3-4 bid-ask spread in the name, a little too thin for my cup of tea. But still setting up nicely. So we have these 4 trades, kind of like, who cares, whatever. And then we have other trades like, Tesla that's up 20 or 30%. And then you got like NVIDIA that it really is, kind of just getting started given this gap if it holds tomorrow, and then potentially get that run up back to 210. So you get, not every trade is going to work like Tesla, or not every trade is going to, push higher like NVIDIA, but you take 4 trades, you make a little bit, lose a little, and then you really make it from these trades. So that's just, kind of how it goes with trading. They're not going to always work every time. So just a few other names to keep a close eye on. Again, this EDU, China names have definitely been waking back up this year. So keeping an eye on this 56 base breakout versus 50. We can see it's been setting up kind of all year, had a little breakout back in October, kind of pulled back in and just waiting for the next attempt through 56. We have this HLT, Hilton. Again, our buddy John Dominguez was hawking this thing all summer, got a little breakout a few weeks ago or 2 weeks ago, and now just waiting for it to set back up for the next attempt through that 280 as the 200-day continues to catch up. This team, again, in the moment, there's definitely been a shift back to the momentum names. We can see this little flag forming in team up through 80. So keeping a close eye on that as it continues to flag. This CASY does have earnings tomorrow on the 9th, but there is, potential blue sky breakout or opening range breakout forming in that one. So keep a close eye on that tomorrow, see how that reacts. Again, so far, no setup yet, but definitely keep an eye on this 30 breakout. Name still looks great. Just needs to really clear this 30 and kind of get away from this area. SEI, nice textbook breakout, setting up through this 5650 area. We can see the multiple attempts. First attempt, retest, pulls back in. Third, fourth time's a charm. So keeping a close eye on that. Keep an eye on this BE. You can see where the breakdown was in this name recently. We can see that's now turning into resistance. So just keep an eye as 200-day catches up for that breakthrough 120, for that move back to 148. And last but not least, this ISRG through 580. This nice textbook flag that's forming out here. Probably still a little bit early. Probably still has to kind of shake this 560, but eventually that 580 breakout looks great. And then, the big name to avoid, we're talking about this a few weeks now. Again, we avoid names when they split their stock. And Netflix is still down, about 10% since that split. Typically, you want to avoid these names for at least a month post-split. You got 200-day act against resistance all around, lower price actions in the cards with this Netflix. So these are the reasons why we want to avoid names once they have these splits. So hope you guys found this one helpful. Again, big focus really this week is just maximizing this potential winner in NVIDIA, minimizing risk as much as possible. We get this gap up holds tomorrow. We raise that stop to today's low of day, which is below this 182 area. It's about $1 risk if this gap up holds. So with that, thank you guys for stopping in, and we'll see you next week.